Good afternoon and welcome this afternoon to Market Movers. It is the end of the week. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend James Boyd to help us round out this holiday concatenated week, if you will. So let's take a look at what's going on. We're going to see what's going on in the market today, what's been going on, and maybe take a peek over the horizon for just a brief moment. Got a couple of things we want to mention to you about upcoming events. So let's go ahead and get started with a couple of quick housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. It's not a recommendation. Simply an educational example, especially when we talk about specific securities or segments of the market. Also, we're not going to likely talk about options today, but remember that options carry a high level of risk. They're not suitable for all investors. Make sure they're aware of the characteristics and risks. Most standardized options before considering any options strategy. Also, remember, we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It's a great learning environment. It's a great sandbox for practice. However, it is not a guarantee of future success out there in the real world. Another thing to think about, there are lots of different ways to look at the market. Fundamental analysis, technical analysis, probability analysis, all are theoretical in nature. None of those are guaranteed. And Schwab doesn't recommend to use technical analysis as a sole means of investment research. Past performance, no guarantee of future results. So if we keep those things in mind, we're going to avoid some of those cognitive and behavioral biases that we might fall into. But let's take a look and jump out into the market and see what's going on. So I'm going to jump over to the Thinkorswim desktop software platform here really quickly. We'll get a sense of what is going on. By the way, remember this event now has moved today. This Market Movers webcast has moved to 1 o'clock Mountain Time, 3 o'clock Eastern Time. It is a 30-minute show. It's recorded. We record all but 2 of our webcasts throughout the week, so you can watch those at a later date. Welcome to all of you, and thank you for being here again, whether you're with us live or in the recorded version. We appreciate you being here. And again, participate in the conversation. That's why James is out there in the chat. Well, that and the fact that he likes hanging out with all of you. But he's there to help answer questions along the way, as am I. And if you're in the recorded version, leave us a comment in the comments section. And either way, click on the subscribe button down here at the bottom of the page if you've not done so already. Let's take a look at what's going on in the S&P 500 here as we end this holiday shortened week, as we go into perhaps a thinly traded Friday, given the fact that the holiday occurred on a Thursday. That often leads to taking Friday off as a holiday. So we have a long holiday weekend, potentially in some cases for traders. We see the market down a little bit. Now, earlier in the week, as I was doing a couple of other webcasts, I drew these diagonal trend lines here across the top of the SPX and across the bottom of the SPX, giving us what Pat Mullally and I used to refer to as a bit of a cobra pattern, a bit of a squeeze symmetrically at the top of or at the bottom of a trending move. And that's kind of what we're seeing here, is a little bit of a break to the downside out of that cobra pattern. Oftentimes, but not always, technical analysis will suggest that price is going to break out in the direction of the prevailing trend coming into the pattern. In this case, it has not done so. So we could maybe make the argument that if we were to bring that diagonal line down to the horizontal, we've got ourselves a little bit of a descending triangle going on that we haven't broken yet. But take a look at the RSI, that relative strength index seems to be rolling off a little bit here today, which is a continuation of what we've seen all week. The last 2 or 3 trading sessions, we still have about an hour to go in today's trading session. So this could reverse itself. It's not set in stone yet. We could see some continued downward movement. This could reverse and move back to the upside. But the RSI is kind of weak a little bit here today, as it is in the NASDAQ. We see the NASDAQ, in fact, in the RSI today, breaking kind of that horizontal support level and making a move to the downside with maybe some of those technology names. And we'll take a look at some of the Meta and a few others, perhaps pulling back just a little bit on some news. Tesla with the robotaxi event, maybe making a move as well. And so we'll take a look there as we get into some of these individual stocks, but perhaps a bigger break in that Cobra type pattern today with the 50 and the 200 approaching the golden cross, as James always likes to talk about. I know that's one of the things that he looks at. Now, the way that James looks at crossovers in some of his webcasts, and I'll let him put his links to his webcasts in there because he has a great discussion, not only in his trend trading webcast, but also in his investing master series webcast. He talks a lot about the idea of breakouts and crossovers. This is one potential crossover, the 50 period moving from below to above, the 200, oftentimes referred to as the golden cross. Very rarely does the golden cross return or a payoff on that golden promise, because it usually happens after the fact. Now, that being the case, with the declining RSI and a break of a diagonal trend line, or diagonal as James says it, that may be an indication of perhaps a little bit of a pullback into a support level here in the NASDAQ. Taking a look at the Russell 2000, still more of the same, kind of those piano keys types of candles here, up and down and up and down and up and down, and really kind of alternating here over the course of the last week. Not a lot of range movement, a little bit of movement within the candles themselves, but still staying kind of right along that horizontal support level around the 2110 mark or so. Definitely in between the navigational buoys of the 200 and the 50 period moving average, the 50 period being below, 200 period being above, and it's kind of squeezing this price in the small caps. And it's very likely, given the fact that we had a Fed meeting this week as well, very likely going to continue to stay that way until we get movement either on tariff deals, until we get movement on interest rates from the Federal Reserve and not just from policy discussion. And that sideways movement, because again, reflective of the composition of the S&P or the Russell 2000, financials, industrials, and technology, there hasn't been a lot of leadership here within this particular space in the small caps, despite the fact that if we were to put our interest rate comparison on here, I'm just going to do this COMP comparison, and we'll put our interest rate line on here. We'll put in the futures contract that helps us to track interest rates /10Y. We're not using this as a tradable instrument. We're using this as a measurement of what interest rates are doing. I'm going to click OK and apply and OK. And I'm going to zoom back out, and we can see what was happening with interest rates. You can see that generally there's a pretty strong correlation between those interest rates, inverse correlation in some cases between interest rates and the small caps. Interest rates rising, small caps going down, interest rates falling, small caps going up, and now they're both kind of sideways. That makes sense, given the fact that these are some of the companies that are perhaps a little bit more interest rate sensitive generally. And so sideways movement in interest rates, the 10-year, again, coming out of the Federal Reserve, meeting their indication as they navigate a pretty twisted and narrow pathway to potential rate cuts, still indicating in their statement the possibility of 2 rate cuts over the course of the year, although the time for those rate cuts is growing shorter, isn't it? Now we're at the midpoint of the year and continuing to move sideways. Now, speaking of the midpoint of the year, I wanted to show you this really quickly here, given the fact that we've got some great providers of information within the Schwab pantheon of economic contributors. So coming up next Tuesday, June 24th, 1 to 2:30 p.m. Eastern Time, my good friend Joe Mazzola, who is the head trading and derivatives strategist here at Charles Schwab, and in fact is the visionary leader in charge of the education coaches here at Charles Schwab, will be leading this discussion next week, the 2025 mid-year market outlook. I've hosted this webcast before in the past. In fact, I hosted it last summer. I'm turning that back over to Joe Mazzola, and he's going to host that. It is a great opportunity to kind of get a read on what's going on. And I think if ever there's a time to kind of get some mid-course, mid-year correction and information, this is the place to go. Liz Ann Saunders, our chief investment strategist, Kathy Jones, our chief fixed income strategist, and Michelle Gibley. And I think this is a unique and great addition to this webcast. She's our director of international research. As eyes turn globally because of geopolitical risks as well as tariff indications, this is going to be a great discussion. So join us for that. You can click right here on register now. Here's where you're going to find this. If you go to Schwab Coaching and you go to the second of the choices here, so it's schwab.com/coaching, then click on live webcasts and virtual workshops, then go down to the list, find for Tuesday, the Schwab Coaching Special Event, the 2025 Mid-Year Market Outlook, and then click on Learn More, and that's going to bring you to this page. And you can click right here and register for that event. And by the way, this event will be recorded, but we'd love to have you live. Great opportunity for you to participate in that discussion. And there's some great takeaways from this. Some great articles leading up to this, and it's good primer for what you're going to hear about in this particular webcast: the stocks and economy outlook, treasury bonds and fixed income outlook, and international stocks and economy outlook. Jeffrey Kleintop and Michelle Gibley bringing that information to you. So some great information right there for you. Now, let's jump back in and let's see what else is going on in the market today as we get close to the end of this trading day, and the market seems to be moving to the downside, continuing to move to the downside. I'm going to pop this down into a shorter term time frame, and we can kind of see the balance of directional power here in this short term time frame. So you can see my diagonal trend lines. NK says, do you have to register in order to attend the event? Yes. Yeah. Great question to ask. Yeah. In order to attend the event, in order to get that link, yes. Now, that doesn't mean that you have to register right now. There's, there are a lot of seats. It's virtual. So if you're unsure about whether or not you're going to be able to attend, you can register now. And if you don't attend, that's fine. You can go back and watch the recording. But if you want to register closer to the event, you can do that as well. But we'd love to have you there with us as well. All right, taking a look here. Again, there's our squeeze. Those diagonal trend lines are starting to see the S&P 500. But what I'm noticing here in the short term is a little bit of push to the upside on this 5-day, 5-minute chart, starting to move to the upside, starting to see that breakout or that possibility of bounce, off of that 59.60 level and starting to see that move to the upside. Now, that downward pressure over the course of this day, and you can see where we started the day, on the SPX belies a little bit of what's going on with volatility. So I'm going to pop over here to our VIX grid. And we would expect that with a down day like we're seeing today in the market, that we would be seeing perhaps a bigger move to the upside in the VIX. And we're just not. I mean, VIX is just solid sideways here, stuck right in the middle of that 20 handle, 2078 level. And it was down a little bit lower earlier today. It is kind of sitting at this mid portion of the range. So not a lot of volatility going into this weekend. That maybe suggests that investors into this weekend had been paring back some of their risk, had been selling off a little bit of that position exposure going into this weekend. And maybe this final little bit of a push to the downside doesn't represent panic, just represents unloading and clearing the decks prior to what could potentially be, because we have certainly geopolitical risk afoot, what could certainly be an impactful weekend. Nothing specific, but remember, nobody expects the Spanish Inquisition, and that is when news could possibly happen, right? Is when we least expect it. Now, that being said, that also has manifested itself in some other areas, say, for instance, the energy market as well, which we'll take a look at here in just a minute. But I wanted to take a look at one other factor here, and that is the volatility of VIX versus the VIX. And we've looked at this chart before. The VVIX is that volatility level of the VIX, how active institutional traders are in purchasing protective strategies and protective products against long stock portfolios. Generally is what drives that VVIX, right? So they've been relatively active, which might suggest that institutions are hedged against some of that risk, and that's why we're not seeing the VIX exposed more than it is, and not kind of exploding or not moving higher on this somewhat of a down day. So the VIX kind of staying where it is because perhaps that protection has already been purchased and has been in place, and purchased perhaps when volatility was a little bit cheaper than it is now. So that being said, there might also be a little bit of unloading of some of that volatility after the Fed meeting, after the holiday. But it may very well be that they're just holding on to positions, holding on to those protective positions going into this weekend, with that possibility of some uncertainty over the week. Now, what I also want to do in taking a look at this is I want us to take a look at one other, actually a couple of other charts here. And I've got my sector index grid. But before we get to the sector index grid, I wanted to do this. I wanted to look at the S&P 500 relative to a variety of moving averages. Now, these are just simple moving averages. There's lots of different ways that you can use and look at moving averages. Michael Fairborn on Wednesdays talks about this in his market and sector analysis webcast, talks about the relative position of the S&P 500 and the components of the S&P 500 relative to their moving averages. So this is a subset of that. So these are simply the components of the S&P 500 relative to 3 time periods of moving averages. So where is kind of the greatest perspective? We're seeing the greatest number of components of the S&P 500 above the 50 period simple moving average, which makes sense given the move. We've also seen that coming down a little bit in the last week. Likewise, those components above the 100 period simple moving average, less than those above the 50, also kind of declining, although maybe staying a little bit flat over the last couple of days. So not a lot of, again, abject sell-off. Same thing with the number of components above the 200 period moving average, staying relatively flat, neither pushing higher nor really significantly pushing lower. So some of those components, once they're above that 200 period moving average, may just stay there. That would indicate perhaps a little bit of sideways movement. It might also suggest that in some of the leadership of the S&P 500, there's a little bit of a rotation, maybe below some of those faster moving averages. So that's where I want to kind of come back to this next segment, and that's taking a look at where maybe there is some movement within the S&P 500. So we're going to take a look at the S&P the sector index grid, and we've used this chart before. I'm going to put this on the grid view. And let's take this back and we'll put it on the grid view so that we can see where some strength is. So each one of these is labeled. The labels are kind of are designed to show up when we open up or expand each one of these. But I know this is, again, another chart that Michael Fairborn uses quite often. But I wanted to just kind of roll through these 11 sectors and see where there is strength. Energy starting to make that little hook at the bottom, and we can see the big explosion in energy prices, or at least in the energy sector, over the course of the last couple of days, and was starting to do that last week, starting to do that 2 weeks ago. It's still below the 50 period moving average 2 weeks ago. Materials coming back down a little bit, maybe reflective of that increase in energy prices, but still above the 50. Industrials had been moving higher, kind of going sideways here, but the 50 period moving average still reflective of that upward move. Consumer discretionary is bleeding off a little bit today. Still the 50 period moving average moving higher. And in fact, across the board here, the only one of these moving averages, the only one of these 50 period moving averages is moving lower or staying roughly the same as healthcare. Consumer discretionary is one of the only segments of the market currently. In fact, it is the only segment of the market in terms of consumer staples, below the 50 period moving average at the moment. Healthcare, I lied about that. Healthcare also below the 50 period moving average with that move to the downside. Financials also still moving higher, although maybe going sideways in terms of price. Information technology, you see, has perhaps rotated back into some leadership, as has communication services, although a little bit weaker performance today. Utilities kind of ticking right at that support level of the 50 period moving average. Real estate moving a little bit higher. And overall, the picture of the S&P 500 versus its 50-period moving average, makes it look very, very similar to what we're seeing in terms of industrial. So seeing some strength today in energy. If we were to pop down into these individual grids, let's take a look and see where we're seeing some strength. Energy, a little bit of an update today. Materials down, largely likely on energy prices, because that influences as a raw material input into that space. Industrials also may be seeing a little bit of a pullback, maybe some wait and see on CapEx spending, because we are very, very close to another earnings season. We are a week away, roughly, from another earnings season. Discretionary is kind of going sideways still. We're going to start to get some late reporting retailers, but also maybe some changes in guidance. Consumer staples below that 50, but starting to turn back up a little bit. Healthcare, as we talked about, down below the 50-period moving average. Financials going sideways. And infotech kind of staying where it was. This has been where there has been definitely some leadership here. And as we continue to see this move to the downside, communication services seeing some a bit of a downward move. And again, remember, the 50-period moving average is going to lag a little bit behind the price move. Utilities moving higher. As interest rates move lower, utilities are want to move higher, not a guaranteed relationship. Interest rates moving lower should be beneficial to real estate, but doesn't seem to be really in this particular case. So here's what we're going to do. And I will share this grid as well. And I've done it before. It's in the description page. So for those of you watching the recorded version, you're going to see it there. Remember, anytime we share a grid or any shared items, those are not guaranteed as to time or accuracy. So I'm going to put that out there in the chat. And you've got that shared there. It's also in the description of this particular webcast. So let's do this. I'm going to pop over here to the Market Watch tab really quick. We're going to go to the S&P 500. We're going to see where there is potentially some leadership. Consumer staples here. Kroger rocking and rolling to the tune of an 8.93% up move today. On the other hand, in that communication services space, Meta making a down move to the tune of almost 2%. And Alphabet, both Goog and Google, moving down roughly the same amount, a little over 3%. A lot of that has to do with the same thing, right? This is Google, Alphabet, and Meta all facing some hurdles in the European Union space, coming home to roost. I talked a little bit about Meta this morning on the Schwab Network in the Morning Movers show. By the way, the Schwab Network brought to us by our media production company, Charles Schwab Media Productions, separate but affiliated company, not a broker-dealer, and not in the business of transacting trades. So if you happen to take a look at the Schwab Network, you're going to see an ongoing rundown of what's going on throughout the day. Now, let's take a look where there is some strength, though, as we come down to some of these areas. And again, energy, one of those spaces where definitely some movement higher, talking about Williams and Kinder Morgan. So in the roughly kind of in the services and E&P space, definitely some movement to the upside. VLO in the refinery space moving higher. But ExxonMobil in the integrateds, definitely to the tune of about 1.1% in terms of market cap, one of the larger blocks on the grid here. So definitely some upward movement within the space. So now George asks a great question. Can we change the heat map? Can we change the time period for the heat map? No. In fact, this heat map is a one-day heat map. It is what is going on today. So as we go into the close, this is showing you where there is some strength. Let's take a look at, say, for instance, Kinder Morgan here, for instance. I'm going to pop back down here into the chart. I'm going to change my chart grid to my single grid, which is my sandbox just for looking at what's going on. And we're going to take a look at KMI. And we're starting to see that little bit of a bounce here higher on Kinder Morgan today on that move up. I'm going to take a look at throughout the energy space as we take a look at some of those others. In the integrated space, ExxonMobil maybe continuing this little bit of a bull flag type move, if you want to think about that as we would look at that standpoint. So we had a spinning top candle, bearish engulfing candle, now followed by a large harami, right? So the large bullish harami. Now, this type of pattern where we get a small candle, big candle, small candle, this is something that Pat Mullally and I would refer to as bullish earmuffs, simply because it's bracketing this big red candle as a possible bullish move. And if you think about it, what this really is in fact a bull flag, right? So we get the bull flag move up here to this point. The pullback is occurring over the course of one day, and we're now seeing that move higher. Now, in strict bull flag adherence, and I don't believe in strict technical analysis adherence to pretty much anything. I'm more of the Jimmy Buffett approach, not too particular, not too precise. This would be a bull flag, but in strict terms, that one-day pullback maybe makes the likelihood of this being a bull flag a little bit less so. Nevertheless, it's creating a level of support here right around that 112 mark. And so for those of you that are adherents of the hold or close above the high, the low day philosophy, you might be looking for a move above this 115.20 mark as a potential breakout type of entry into that bull flag type of movement. So bullish earmuffs, exactly, Danny, you've got it right there. Bullish earmuffs, two green candles surrounding a bigger red candle. So that's the perspective here as we start to see that move higher. Now, I'm going to leave you with, since we're here in the single grid, some space, some directional strength here in energy. But 50 years ago today, and I made an X post about this. By the way, you can follow me on X at Ben Watson CS. You can follow James Boyd on X at James Boyd CS. I'm going to bring up this particular stock, CMCSA. And some of you know that Comcast is the parent company of NBC Universal. NBC Universal is the parent company of Universal Studios. Some of you who are following me on X already know the reason why we're taking a look at this. Some of you who are movie fans already know the reason that we're taking a look at this, because 50 years ago today, we found out that it is not safe to go in the water. Dum 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 dum. 50 years ago today, the movie Jaws was released. And so we're going to take a look at this grid. I'm going to go out to our max time frame. We're going to put this on our maximum available. I'm going to put this on a monthly chart. And there is our Comcast max chart. I'm just going to draw this in here just to see if you're seeing what I'm seeing. There is our big shark fin right there on the water. And I think we're going to need a bigger chart because we don't go back 50 years here from now. But I'm going to leave you with that today, guys. It is Friday. There's another hour left to go, or actually another half an hour left to go in the market. So take the information that you've learned, put it to use. Take what we've talked about and look over the horizon for next week. Next Friday, I'm going to be in New York City. I think it is going to be Brent Moore's handling the duties here in Market Movers. But if you want to learn more about what's coming up, check out our Trader Talks channel. Remember to click on subscribe, click on the like button as well. And if you want to search for any of the topics, you can search for them right here. We would love to see you in all of our webcasts. By the way, we're going to be at the Marriott Marquis next Saturday, a week from tomorrow, doing our New York City Market Drive event. Come and join us if you are in the area. We will see you there. My thanks to James Boyd. My thanks to Gabe and Andrew and Nikki and everybody else who helps out with these webcasts. Guys, have a great weekend. Keep your arms and hands inside the ride at all times, or actually in this case, keep your arms and hands inside the boat at all times. Hang on and have fun. We'll see you soon. Take care, everybody. Bye-bye.